Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 11th of May. All right, now we're getting closer to these US CPI numbers on Wednesday, and that's giving us a plenty to think about. The currencies, this little dollar weakness that we saw following the non-farm payrolls has really stalled. You can see the dollar index there drop down. Now it's just trading sideways. We've got a bit of a risk-off situation here with the US equity futures. Okay, and that's really pausing or putting a bit of downward pressure on the dollar block and a little, I wouldn't say upward pressure on the dollar, but what it is, let me just show you the charts. It's easier to explain and show you. And this is a big number, right? It's the first time I've had a number on the back of another big number, like two big consecutive numbers where it's all on the line, right? Well, I was going to say exceptionally weak non-farm payrolls. Really weak non-farm payrolls. We've got the CPI. We got weakness. We got high unemployment. No one's spending. The US economy is not traveling well at all. Dollar should get hammered. Everything rallies through the roof. But so you can see here in this situation where you've got this second double whammy, which is the CPI, markets really do sort of square up and get diffused. So that move from last Friday. Okay, sterling still hanging on to most gains. Dollar Swiss is lower, but as you can see, trading sideways, dollar yen sideways. Aussie's given up the ghost and started drifting, as has the Kiwi. One thing's for sure, dollar CAD. I mean, this thing is just heading south, right? So one thing that you get some weak CPI numbers on top of this. You've got a strong fundamental CAD, and you got weakness in the dollar. I mean, it's like the market's already jumped the gun. This thing's heading below sub 120. Definitely by the looks of things. The only thing sort of could spoil the party a bit is oil, which is falling a little bit. So anyway, we'll see how that goes afterwards. It's not going to slow down this number by any stretch. So what we've got is a situation where you have to just hold steady, right? We've got you come through and start looking around what's out today. Like there's some good numbers out, right? There's some short-term trading opportunities potentially. And when I say short-term, I mean 4 to 6 hours, 8 hours, course of a session. The zoo economic sentiment numbers, I would expect these to be weak. Okay, going back to, remember that third wave in Europe a couple of months ago? This number should have those sentiment in there, and it should be weaker, which may put downward pressure on the euro. Although the CPI is so big, you know what? I think everyone's going to stand back and just wait and really charge in on Wednesday on the back of these US CPI numbers. There's almost too much to play for, right? This is, as I said, it's the first time in short memory, as in like year or so, where we've had the US numbers impacting. We've had two big numbers consecutive where it's all loaded up. We've now got the Fed saying their pitch. We've got Janet Yellen talking. It's all coming down to the CPI. If it's weakness on top of the US non-farm payrolls, I think that's doom and gloom for the dollar. And we'll see over the course of the coming weeks, we'll see 200, 300, 400 points on most major pairs. If the numbers are strong, right, well, then it could really screw things up. Now, but let's give you a look at these numbers. Let me just scroll down here too on Metastock. One of the key things that you have to look for is we're looking at the prior number, right? So you get these CPI numbers. Now, to get the actual forecast, I'm looking at Trading Economics, a good site for those that are looking for a bit more detail. Now, with these numbers, if you look at the year-on-year numbers, they're looking for much higher numbers, right? Year-on-year through the roof, but month-on-month, okay, here's the 0.6, they're looking for 0.2, 0.3, right? So this is going to be a weird one because usually if month-on-month's high, year-on-year's high, they're looking for a spike on the year-to-year, weakness on the month-to-month. That could confuse traders initially. So just be careful with that, what's going on. I think for me, the year-on-year number, that's probably more important. I know we're micromanaging the US economy, and that's where the month-on-month numbers can come into play. But this is, what we ideally want is strength in the year-on-year and month-on-month. What I'm trying to explain to you is the forecasts are for weakness in month-to-month and year-on-year through the roof. So that's going to be a little bit of a hard one for traders to interpret. So it might be worth just waiting to see how this comes out. But you got to think weakness on both numbers from those forecasts Okay, so lower than 3.6 and lower than 0.2, well, that's where we get the big move, right? So don't focus too heavily on the prior numbers. They are just the prior number, and that's it. Anyway, I'll talk more about that tomorrow. It's going to be an interesting session. I was just having a look there. The treasuries, they are up, right? The yields are up. You think the dollar would be rallying? Well, that's the disconnection, I should say. So right now, focus on what's happening right now. Okay, don't sort of go thinking long term, almost like I was saying there. Okay, we've got a risk-off situation. US equity futures opening lower. The Dow Jones, S&P, NASDAQ should open up lower. That should put downward pressure on the dollar block, and the dollar, a little bit of upward bias. But as you can see, as I was explaining, that's the structure, but we aren't seeing any major movements, right? The ranges here are muted, and we could have this for the, the next 36 hours at least, until these US numbers are coming out. All right, guys. So market in a state of flux, maybe a few short-term range trading opportunities just at the moment, but the big move will come Wednesday on these US CPI numbers. All right, guys, good luck. Catch you later. Cheerio.